There is one chart. One. And somewhere out there, a man is using it to pull $500 out of the market before your coffee even gets cold. They will tell you it takes years. They will tell you it takes $50,000 and a wall of monitors. That is the story Wall Street wants you to believe. But here is the part that should keep you up at night. 97% of the people chasing this number lose. 97. So how does the other 3% do it with a single line on a screen? One chart, one rule, one window of time each morning that decides everything. By the end of this video, you will know exactly what that chart is, why almost nobody can actually trade it, and the one detail the gurus selling it always leave out. Stay with me. Alright, my name is Sargon, and this is Strategy State, the channel where we tear the pretty wrapping paper off money and look at what is actually inside the box. Today's box says, one chart, $500 a day. It is the most searched trading promise on the internet, and it is also one of the most dangerous. So, let's do what nobody selling a course will do. Let's open it honestly. Because there really is a real strategy underneath the hype. A specific chart. Real numbers. A study from actual quants that put it to the test over 7 years. And there is a reason 97 out of 100 people still fail with it. Both of those things are true at the same time, and by the end, you'll understand why. So what is the chart? It is not some secret indicator you have to pay for. It is a 5-minute candlestick chart of a single stock, with one line drawn across it, the VWAP, the volume-weighted average price. That's the line the biggest funds on Wall Street measure themselves against every single day. A plain price chart and one honest line. That is the whole toolkit. The strategy is called the Opening Range Breakout. The idea is almost stupidly simple. When the US market opens at 9:30 in the morning, chaos hits. Every overnight order, every piece of news, every big fund, it all slams into the first few minutes. So you don't guess. You wait. You watch only the first 5 minutes, and you mark the high and the low of that range. Then you wait for price to break out of that box. If it punches above the high, you go long. If it breaks below the low, you go short. Your stop loss sits on the opposite side of the range. That's the entire entry. No crystal ball, no gut feeling, just a box and a break. Now, if you are sitting there thinking, that sounds way too easy to make $500 a day, hold that thought. You are exactly right to be suspicious. But before we get to the trap, I need to show you the numbers that made this strategy famous, because they are genuinely jaw-dropping, and they are not made up. In 2023, a quant named Carlo Zaratini and a trader named Andrew Aziz published a research paper with a blunt title, "Can Day Trading Really Be Profitable?" They didn't guess. They took this exact 5-minute opening range breakout and ran it on the NASDAQ from 2016 through early 2023, through 2 bear markets and a pandemic crash. The result? A day trading account that started with $25,000 in 2016 grew by 675% by 2023. And that is the plain, unleveraged version. On top of that, the strategy beat the index by an average of 33% every year after commissions. Then they ran the exact same rules through a 3 times leveraged fund, and the number exploded past 1,400%. A later, larger study pushed it further still. Across more than 7,000 US stocks, the rules were tightened to trade only the most active names each morning, and the backtest returned over 1,600%, with a risk score professionals would kill for. On paper, this is the closest thing to a money machine that public research has ever printed. So there it is. One chart, a simple rule, and academic proof it can print money. Video over, right? Go get rich. Except, no. Because if this worked the way it looks on paper, every one of you watching would already be a millionaire, and you're not. So here is the question that actually matters, the one the gurus sprint past. If the strategy is public and proven, why do almost all of us still lose? Let's talk about that 97%. It is not a scary number I invented for the intro. In one of the most complete studies ever done, tracking every single person who day traded futures in Brazil for over 300 days, 97% of them lost money. Only about 1% earned more than the minimum wage. 1%. It's not just one country. Regulators in India found that in the 2024 to 2025 financial year, over 70% of intraday stock traders lost money, and in options, it jumped to 91%. In the US, the industry's own body, FINRA, reports that around 72% of retail day traders finish the year in the red. Roughly 40% quit within a single month. And here's the coldest statistic of them all. Over a 5-year window, only about 1% of day traders stay consistently profitable. 99 out of 100 either quit or bleed out. To put that in perspective, you are statistically more likely to survive certain forms of cancer than to be a profitable day trader 5 years from now. Now hold on. If the strategy is proven and almost everyone loses, one of two things has to be true. Either the study is a lie, or the strategy is not actually the thing that makes people money. And here is where it gets interesting, because it's the second one. The chart is real. The edge is real. But the chart was never the hard part. Let me show you what actually separates that lonely 3% from everyone else. Remember that monster 1600% result? Here's the detail almost nobody quotes. When the researchers ran the same breakout on all stocks, blindly, the return collapsed to a pathetic 29% over 7 years, worse than just buying an index fund and going to the beach. The magic only appeared when they added one filter: trade only the stocks that are in play. In play means a stock with abnormal volume that morning, usually because of fresh news, earnings, a catalyst. The signal they used was relative volume, how much heavier trading is compared to normal. When the first 5 minutes traded at least twice the usual volume, the edge showed up. Below that threshold, the average trade actually lost money. Same chart, same rule, completely different outcome. So the first thing the gurus leave out is that the chart is worthless without the filter. But there's a second thing, and it's the one that quietly kills small accounts. The study assumed near-perfect execution and tiny costs. In the real world, you have spreads, slippage, and a taxman. On the lowest time frames, those costs eat a good strategy alive. Here's a number that should sober anyone up. Traders who use leverage, borrowed money to size up exactly what those insane return figures rely on, post an average return of -4.5%. Leverage doesn't just multiply your wins. It multiplies the losses, the fees, and the one bad morning that wipes out a month of good ones. And the psychology is brutal. Studies show that after a winning streak, traders get bold. They size up right before the market humbles them. Up to 95% of people who blow up come back within the year, convinced they were just unlucky. The strategy didn't fail. Their discipline did. The chart is math. The trader is a human being. And that gap is where the money disappears. So let's go back to that man from the very start. The one pulling $500 out of one chart before your coffee gets cold. Does he exist? Yes, he's real. But here's the secret the intro was hiding. The chart is the least important thing he owns. What he really has is the filter to only trade stocks in play, the discipline to take the same boring setup 1,000 times, the risk control to lose small, and enough capital that $500 is a sane target, not a desperate one. The one chart is real. The 500 a day is real, for the tiny few. But the chart was never the answer to the riddle. The chart is the easy part you can learn in an afternoon. The hard part is becoming the kind of person who can actually trade it, and that is exactly what 97% never build. The gurus sell you the chart because the chart is easy to sell. Nobody can sell you the discipline. So if you take one thing from today, take this. The next time someone waves a single chart in your face and promises you $500 a day, ask them for their relative volume filter, their loss stats, and their tax bill. Watch how fast the video ends. Funny how the one simple chart always comes with a not-so-simple $300 course, isn't it? If this saved you from one bad trade or one bad course, then do me a favor. Hit that like button. It genuinely helps the channel fight the hype machine. Subscribe to Strategy State, because next time we're opening another box, the market doesn't want you looking inside. I'm Sargon. Keep your risk small and your eyes open. See you in the next one.